There's one stock that is about to jump up. They have a collaboration with Apple. Apple chose them as the builder of a massive solar installation, one of the largest commercial solar projects in history. That was back in 2015, and again, they're at a very important level. The solar ETF is also looking okay, pretty good. But this company in particular, the ticker is FSLR, First Solar, is ready to go. So let's take a look at the chart and then jump into what it is they do compared to their peers in solar. So here is the level right now, 220. Did sort of get slammed down today, but the market as a whole got slammed down today as well. So we don't have to get too worried about a single day here. That's why we're looking on a weekly time scale, and we can literally look on a weekly time scale here, zoom way out and say, this company basically is at an important spot, okay? $200 whole dollar level, a little bit above there, and then this 300, 306, 250 is the all-time high level, and then the next level to reach. So name of the game, before we get into what they do and the connection with Apple, is this company just keeps building. The revenue is sort of trailing off, and it continues to go up, which means there's not a lot of sellers. So here's the sort of level right now, 205, and then 220 right here is most relevant. So why am I talking about that? Well, because that's about as far back as we can go. When you go back more than 6 months, you're talking about people who already would have sold down here. So their overhead supply is not going to be significant. So if we zoom into 6 months, here's where we're basically looking. And that's important because if you buy it tomorrow or the next day, you can risk off of this level, risk $1, and make 10, 20, 30, okay? That's the whole idea here. And you can see there's not much volume traded over there, but we can just sort of see that looking at the chart as well. Now, let's jump into what it is they do so that we can feel a little better about what we're buying, especially if we're holding a stock like this over the weekend. We do want to make sure that it doesn't have a ton of dilution risk, or just it's not a biotech or something where news can come out, or if some type of trial can come out that completely obviates the need for the company to exist at all. So here's the connection with Apple. That partnership was back in 2015, 25-year power purchase agreement, and almost $1 billion, okay, 800 million. So it's a big deal, and they could have chosen a lot of other companies. They chose FSLR. We'll talk about those other companies in just a moment. And revenues over $1 billion. Here is the 10Q, and those are the revenues, and then that's the net income per share. But honestly, ChatGPT is so good that we don't really need to be financial analysts anymore. We can just look at what they provide because they're very good at taking up numbers. This is pretty solid to have a increased sales guidance. That's a lot. Revenues are only $1 billion, and then over a year that would be about 4.4 billion. So that would be an increase of maybe 10 to 20%, 10 to 30%, something like that. So yeah, it's optimistic. It's good. This is a problem, okay? Tariffs can be pretty rough. This is what's other companies doing as well, moving to other countries, which seems like they're trying to do that. And then solar tax credits have been helpful for First Solar. So that's positive as well. We can ignore sort of anything related to quantum, but I honestly think this has nothing to do with quantum computers. I was kind of just messing around there, but I don't want to get too deep in what exactly this company does, because this is really what we need to do, is just say, here are the other tickers, and then, what are these other tickers doing on the chart? Enphase, Sunrun, SolarEdge, because if we get too married to what exactly it is they do, then we're going to buy stocks that are all the way down here thinking they're going to bounce, which that's not good investing hygiene. So Solar Run is still kind of holding up. Move down with the market. You can see the market in the overlay on the background. It's kind of mirroring it there. So wouldn't get too worried about that, but I also wouldn't necessarily start a new position there. And then Sedge is the other one, Solar Edge, which looks pretty good. Kind of a place to buy it here, but it's also kind of choppy. So I guess this has to be the way to play it. First Solar has a lot of compressed days. It's 4% average daily range. This is 7%. So, if you're more aggressive, you play the higher ADR names. You don't have to play ADR names with a 15 like Open Door. You don't have to get that aggressive. But I think this is a sort of good balance of opportunity to the upside, while also you're not going to get completely hosed if you don't check your phone or your broker, your 401k for a few days, and you allocate some percentage into the stock. So that's the comparison. Again, sort of purposely just glossing over what these companies do because I don't want to get too embroiled in what they do, even though it's interesting. It's endlessly interesting. There's solar in my backyard right now, but Tesla obviously just had a huge run and is actually holding up as well. And that even though Tesla is sort of, distance from these companies, it never hurts when Tesla's pumping. So I think that does actually matter to some extent. And then as far as investors, there aren't really any insiders. There's not a lot of shares that can be dumped to dilute the float. So that's good. You don't want the number of publicly available shares increasing a bunch because insiders sell out. Because not only does it signal decreased optimism in the company, right? It also means the supply is much greater, so the price can go down. And then here are some positive activities. That's a lot, 350 million. And then these are kind of, that's, what is that? 30,000 times, what is the stock? $200? Yeah, so 60,000, 600,000, $6 million worth. So it's not nothing, but also we can kind of ignore some of these when they're small. So all we have to really say is it's a stock that is real. It's over $1 billion revenue, and they're profitable. So, and they have a bunch of cash in the mid hundreds of millions. So sales backlog as well makes them sound like some sort of AI infrastructure company. They're always talking about the billions of dollars of sales backlogs. In solar, they talk about gigawatts. So that's a lot. Gigawatt is a lot. And we don't have to look about these numbers too much because we're not trying to hold this for months or years. But it does help to say, even though this tariff thing hurt in April and First Solar followed basically the entire market down in April. Well, it rebounded in April, but followed the market down and then came back up about 80%. So nothing crazy. There were companies like Netflix, went up 70%, which is huge for a company that size. Or I guess there were some extreme companies as well. Apple Oven is an example of a company that has gone up 200%. But all things considered, First Solar certainly rebounded, so we don't have to worry too much about the tariff talk. And as we said, or as we saw, they are showing signs of adapting to that. So all we really want to do as sort of dilettante investors is say, hey, chart looks fine. We got a spot to get in. We talked about that. Risk $1 down to this left side peak. Make a lot more. And there's a good opportunity there. It's the best stock idea I can think of right now, along with, CoreWeave, and QUBT. So as of the time of this video, I can't really think of any more than 3 stocks that are worth watching. Those are the ones that are most important. Because look, if you look at Oklo, this thing's going to trail off. Nuclear went crazy, it's going to trail off. If you look at uranium stocks, it's going to trail off. You went crazy, they're going to trail off. And there are speculative names, you know, PGen is a low price speculative name. And there's also QUE that people are talking about, but these are not the kind of stocks that I think are worth getting into as a mid-term to long-term investor. Unless you deeply understand biotech, you know, a Huntington's disease candidate that comes out that 4x is a stock with 1 trial result, that's just not in my wheelhouse. So all that to say, this is the stock. If you like discussing ideas like this, stock ideas, head over to stockscommunity.com. I tried out for $25 for 7 days. You know, see if it's worth that. $25, what's that? Half a tank of gas. So give it a shot, see if it's for you. And if you haven't hit that subscribe button yet, hit that down below, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.